there's so many advantages to this deferred sales trust that we just want to educate you, your trusted advisors, and get their blessing before moving forward. So that's what we're about.
Well, what I love. Who is this not for? I mean, it sounds like, given that sort of monetary threshold, this might not be for the person that has 3 single-family homes. It would probably be for higher net worth individuals who are pushing up higher into that price range, right?
Right. So we talked about the values, right? Where are the values and the liability? And that's just a return on investment, ROI analysis you run quickly on. So if the liability is too small, let's say you're selling a deal for $500,000 in proceeds and there's only $25,000 in tax, Clayton, or you say, just pay the tax because our fees are going to eat up that $25,000 in savings, right? Or if the ratios are out of whack, you're selling a $10 million deal and there's only $100,000 in savings, still just pay the tax, Clayton. That's too small. Just take the 9.9 and just wait for a deal to be fine, right? You don't need us. So it's not for the small deal. That is true if the liability is too big. The second one it's not for would be for someone who actually can find a forced appreciation value add 1031 deal. So if you're a professional investor and you can find that deal, hey, we want to cheer you on. I still do 1031s. I love a 1031, right? I just did an $8 million value add retail deal in Vacaville, and I did another $4 million deal in Sacramento for a value add retail office. Doing apartment buildings right now. So I still do 1031s, but here's the key. Why don't you have a backup plan just in case it fails? And that's where we come in. We can give you that backup plan or that security in case the seller won't deal, the bank won't lend. Everyone should have a backup plan. We don't charge anything for the backup plan. We just have it as a placeholder ready to go. And by the way, it doesn't take one of your 3 positions because it's not a property. So it doesn't affect you at all. There's no negative for having the backup plan, only upside in case it fails. And we get calls like that. We've saved multiple failed 1031 exchanges in the past few months. Okay, so it happens, outside of the buyer's control. So it should be for every single real estate investor, either as a backup plan or as an alternative. Maybe they want to do half and half. You can do a partial 1031 and a partial deferred sales trust. Maybe you sell a $2 million deal, Clayton, and you find the perfect $1.2 million deal. And you have an extra $800,000, and we call that boot. Well, we can take that $800 and put it into the trust. Okay, so you did half and half. So, but it's definitely for the business owner. The guy who's selling a $5 million dental practice or a $3 million veterinarian or whatever, trucking company. They really have no 1031 option. They don't have anything. They just sometimes do an installment sale of their own, which has its downsides. But we want to say, no, don't do that. Get diversified, get liquid, get into a passive income stream, commercial real estate, or by the way, another business venture. It also works for people who are in, we call it Silicon Valley, who are getting bought out by the big tech companies. They can fund their own next business venture with 80% of the funds instead of having to get funding from a venture capitalist or maybe have the golden handcuffs from the Facebooks or the Apples to say, we're going to give you all this stock, but you're basically going to be with us for this amount of years. They can say, no, I want to go create another business. Keep all that stock, put it all into this deferred sales trust. I'm tax deferred myself, and I'm going to use that funding to go fund my next venture. So the onion can be peeled back quite a bit. We just want to start with, what are your goals? What are you trying to do? It's your money. How do you want to receive it? Some people don't want the income. Some people say, look, I'm making too much income right now. I'm doing a deal right now out of Florida for a dental practice, and they're still in their 40s, and it's a big sale. And they're like, we actually don't want the income. So the trust itself can let the income compound, and they don't have to receive that income and pay taxes on their personal tax return. And it's just going to compound kind of like a retirement account. And at a certain point, when they stop working, they can start drawing that income and then paying taxes in that given area. Oh, by the way, they may move to somewhere like Nevada. They already live in Florida, so it's pretty friendly for taxes. But say someone was in New York, they can move to another state, establish residency, and then start receiving income. So there's so many advantages to this deferred sales trust that we just want to educate you, your trusted advisors, and get their blessing before moving forward. So that's what we're about.